Do not trust a single word that comes out of the mouths of the powers that be regarding their efforts for your financial freedom, stability, development, and opportunities. These are merely a shiny mask. When we look closely at the historical records, the scene that emerges is much more horrifying. Governments have used veiled monetary tricks as a weapon to constantly keep ordinary individuals in the swamp of poverty, accumulating wealth and influence in their own hands. The most astonishing part is that these tricks are not a new discovery. They may have taken on different guises for centuries, marketed under new names, but a single goal has not changed: to pump capital to the highest stratum and condemn the vast majority of the public to slavery. Let us begin with the oldest and most ruthless game: inflation. When a state starts spending beyond the limits of its tax revenues, it takes only two paths. It will either choose honesty and openly add a burden to the shoulders of its citizens, risking political suicide, or by a more insidious route, silently drain the lifeblood of the money, causing the value of every banknote in the market to evaporate in seconds. Ancient Rome gave the lesson of this strategy. As of the 3rd century, pressured by military expenditures, emperors gradually began to steal the silver content of the denarius. A currency that was originally almost pure silver eventually turned into a piece of copper consisting of a thin silver plating. The empire claimed nothing had changed, but everyone who held those coins took a heavy hit. Inflation skyrocketed, savings vanished instantly, and wages failed to catch up with the cost of living. This was an invisible, whispered tax taken from the backs of the public. Today, it is an unchanging betrayal applied only through the agency of central banks instead of imperial treasuries. By the 17th century, the financial system itself turned into a trick machine. The establishment of the Bank of England in 1694 was not an act of charity. It arose from the government's desperate need for money for the endless wars it waged against France. However, wealthy investors immediately bought government bonds, and in return, the royalty guaranteed that the interest payments would be covered by taxes. This looks like an honest trade, but who were those who bore the tax burden? The public itself, through indirect taxes, paid on everything from salt to beer, from wheat to bread and cloth. The rich lent money to the state and secured a risk-free, safe interest. The poor, on the other hand, paid twice the tax to cover those interest payments. This was a system of upward wealth transfer presented under the name of national financing, and this sealed a pattern that continues even today. The world's most reliable investments consist of lending money to the state, and those returns are compulsorily secured by the production and consumption of the masses. When we look at the modern world, we see that these games are encountered everywhere. Let's take deficit spending. Governments issue debt instruments purchased by investors, banks, and foreign states, creating massive piles of debt. Politicians tell the public that this is being done for infrastructure, employment, or social assistance. Yet a large part of this amount is poured into defense companies, corporate subsidies, and bank bailout operations. When the time comes to repay the debts, those in power never cut back on spending at the top. They raise taxes, inflate the currency, or ruthlessly destroy social rights. The mechanism here is the presenting of the debt as supposedly for the people, but the burden is again left to collapse onto their shoulders, while the profit flows to the bondholders, and then the massive bailout operations. During the 2008 global financial crisis, banks recklessly gambled, packaged toxic mortgages, and brought the world economy to the brink of collapse. Who was forced to pay the price? Ordinary taxpayers, through those massive state-backed bailout packages. And who added to their fortune at the end of the crisis? The same banking giants who emerged from the crisis stronger and less competitive. The trick was simple. Privatize the gains for yourselves. Socialize the losses to the entire community. and the public was told this was a necessary act of disaster prevention. Even the way governments manage pension and social security funds is a complete sleight of hand. For decades, people in the U.S., England, and across all of Europe made regular payments into these state-managed systems, believing their money would be waiting for them in retirement. But governments generally do not actually save that money, and they spend it immediately, leaving only a future-oriented debt note in its place. The promise given is that the future taxpayers will cover this cost when the payment day comes. This is essentially a generational chain fraud Ponzi scheme, packaged in official documents. It works this way until the population structure changes, the elderly population increases, and the system becomes desperate. Then the government presents it under the name of reform, which usually requires cutting rights, pulling up the retirement age, or destroying the value of payments through inflation. Engrave this repeating motif in your mind. At every stage, the trick is based on perception management. The public is pumped with the idea that inflation is economic revitalization. Forced borrowing is national necessity. Public debt is a commitment to the future. Bailouts are financial resilience. And pension cuts are an inevitable adjustment. This language hides the core truth, the continuous and merciless flow of wealth from the majority to the minority, from the bottom to the top. And history proves that this game has persisted for centuries, because most people do not study economic history, do not grasp monetary mechanisms, and do not perceive the trap until it is set. In recent times, these tricks have only become more sophisticated and more complex. Consider quantitative easing, QE, a term most people hadn't even heard of before the 2008 financial crisis. Central banks created trillions of dollars out of thin air, buying government bonds and mortgage-backed securities to supposedly keep markets in balance. Politicians and finance circles convinced the public that this was an absolute necessity to prevent collapse. And yes, it worked to some extent for the financial structure. Asset values rapidly surged. Stocks, real estate, and bonds gained value. But who owned the majority of these assets? The rich minority, of course. For the average household without large investments, the benefit was minimal, while the cost returned in the form of distorted markets and rising living expenses. The cunning here is that the money creation process saved the system only for those at the top, but exacerbated inflation and financial inequality for everyone else. Another modern sleight of hand is taxation through covert means. Instead of directly increasing income taxes, administrations silently take their share through methods like sales taxes, fuel excises, and especially inflation. When prices climb faster than wage increases, the gap creates a covert tax pressure on your savings and purchasing power. States are in love with inflation because it lightens the real burden of their own debt. But for citizens, it gradually destroys financial independence. Even if your salary looks nominally higher, if your living expenses outpace your earnings, it means you are actually losing your wealth. This is not a system flaw. This is the system's core purpose. Inflation is not a simple economic event. It is one of the most indispensable tricks governments resort to shift the burden of their spending onto you without any admission. Next, there is the phenomenon of regulatory capture. On the surface, regulations are tasked with protecting the public, financial rules, safety standards, consumer rights. But history whispers to us again and again that powerful industry branches easily influence the institutions that are supposed to supervise them. The railroad companies of the 19th century, the oil giants of the 20th, and today's technology and finance institutions all have shaped the rules according to their own aims. Instead of playing the game fairly, it is always more guaranteed to take control of the referee. Administrations display regulation as a tool to appear protective, but behind the curtain, Large corporations create loopholes that strangle competition and guarantee the flow of profit for themselves. The public believes it is seeing protection. The insiders, however, only see certain profit. War financing is another old tactic presented in new cloaks. During World War I and World War II, states issued high amounts of bonds telling their citizens it was their patriotic duty. People thought they were supporting their nation, but these bonds also turned into highly profitable and risk-free investments, guaranteed by future taxes for the wealthy. This pattern did not break in the 21st century either. Trillions of dollars spent on the wars in Iraq and Afghanistan were financed by debt. Defense companies, banks, and bondholders filled their pockets while ordinary taxpayers were forced to carry the entire bill. The game here is the constant presentation of wars as a temporary emergency. Yet their financial liabilities continue to last for generations even after the soldiers return home. States also make complexity itself a part of the system as a financial trick. Tax legislation stretching thousands of pages, financial instruments that professionals cannot even decipher, budgets filled with hidden items and technical jargon, all this creates a smokescreen that makes it impossible for the ordinary citizen to track the flow of money. Complexity is a complete mask. When you cannot observe the wealth transfer, you lose your chance to resist it. In ancient Rome, debased coins were a physical proof of the trick. Today, they are balance sheets hidden under acronyms and incomprehensible programs. The basis of the trick is the same. Make the public tracking impossible so that the transfer can occur without anyone noticing. So, why is this analysis so vitally important today? Because the games are not stopping and are not slowing down. Inflation is silently consuming your savings. The debt burden grows heavier every passing year. Bailout operations remain the single and unchangeable response when markets falter. Central banks continue to manipulate the money supply, while administrations burden the public with costs in such indirect ways that most people fail to establish the connections. The final outcome is a system that forces you to work harder for less real wealth, while the financial elite constantly strengthens. The biggest lesson to be drawn from history is not only that these deceptions exist, but that they inevitably return. When Rome debased the money, citizens suffered great loss. When monarchs enforced forced loans, merchants lost their fortunes. When modern states inflate and borrow, households again bear the burden. Different eras, the same mechanism. And here is the bitter truth that must be told. Most people will never be able to escape these games because they are not aware they are being deceived. They perceive inflation as a natural phenomenon, taxes as an inevitable necessity, and bailouts as acts of grace. They rely on the message of the powers that be instead of studying economic history. And this ignorance is the most powerful weapon of all the tricks. When people forget the past, they cannot notice the history that recurs. This is why the powers that be and elites prefer a populace with low financial literacy. Financial education is your rebellion. Economic history is your sharpest weapon. If you know these tricks, manipulation attempts will not work on you. So, what is the main conclusion you should draw from here? First, always look beneath the headline. When governments announce stimulus, ask who gains first. When inflation rises, do not forget that this is not just bad luck. It is a design policy. When regulations appear, ask who wrote them and who is filling their pockets. Second, outside these traps, build real, tangible wealth, that is, assets that can maintain their power even when the currency loses its value. Third, never trust the system just because it claims it serves you. Systems exist not to protect you but only to sustain themselves. History may not do the exact same thing, but if you do not understand it, it is certain that it will ruthlessly crush you. The financial tricks that left the citizens of Rome poor are the same tricks that drain your bank account today, only camouflaged with modern language and a cloak. The only difference is whether you can recognize them in time. If this gave you a new perspective, hit the subscribe button. History holds all the answers. History always repeats itself if the lessons are not learned. I will show you where you need to look.